Good morning and welcome to this Wednesday, February 1st, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Oh, well, let's see. We got futures. It's Fed Day, and currently we've got futures slightly lower, a little bit more so on the Dow. The Dow actually down 143 points. Futures, that is. S&P futures down 10, NASDAQ futures down right about 10 as well. Crude oil up about 42 cents to 79.29 a barrel, and the 10-year treasury yield down 7 basis points today, 3.46%. It's probably going to be a volatile day, especially this afternoon after the Fed announcement, where the Fed is expected to hike rates by 25 basis points. That will take us up to 4.75% on the 10-year, or excuse me, on the Fed funds rate. And we started off the year, remember, I mean, it wasn't that long ago, we were close to zero. So we've come up quite a ways in 2023, well, 2022 into 2023. And, you know, I know a lot of folks look at the rates and they think, well, how can the stock market go up? Stock market can't go up with rates going up this fast. But rates were at 1% in May of 2022. We're actually higher now than we were before we started the 75 basis point hikes. I don't think a lot of people realize that all the selling, just about all the selling in the stock market took place before these big rate hikes began. Market prices things in. Anyhow, I could go into that, but let's just keep it short and say the Fed is likely to hike another 25 basis points. But I think the key is going to be, what do they say? It's always what they say. So what do they say today? I don't know. That's what makes it a crazy day. Normally, I can only tell you that from following the market for many, many years, Fed Day, when they make their announcement after 2 o'clock, usually there are multiple moves. Sometimes it looks really good right after the announcement. Market takes off, and then literally the carpet gets dragged out from under you and down we go. And I've seen it go the other way, where it looks horrible for the first 15, 20 minutes, market selling off, and then we get this massive rally. Today's going to be interesting because I think this is a key breakout area that we're near. And I'm wondering, maybe if the market, you know, because of the strength most of yesterday after the open, I'm wondering if maybe we're going to gravitate toward those key areas of resistance. Normally, it seems like the major indices move toward a key level before they actually, before the news actually comes out. So that'll be an interesting thing to watch. Anyhow, let's go ahead and get things started here. I'll stop blabbering about the Fed. All right. So for those of you who are new, check out earningsbeats.com. Simply scroll down. You'll find an area where you can sign up for our free Earnings Beats Digest newsletter. This is how I recommend most folks just get to know us. If you are new to Earnings Beats, check us out. We got a 3 days a week newsletter, Mondays, Wednesdays, Fridays. Normally, I say normally out by 8:30 because it's not out yet this morning. I was running late, so it'll be out later this morning. But normally it's out around 8:30. We try to get it out about an hour before the market opens. All it takes is a name, email address, hit that subscribe button. No credit card required. You can unsubscribe at any time. We'd love to have you check out some of the things that we look at in the market, things that are important to us, like earnings and relative strength and candlesticks and so forth. I think you'll find it educational. Maybe you'll find a trading candidate that you like. That's completely up to you. We're certainly not registered investment advisors. We're not advising or recommending anyone to buy anything. It's just an educational newsletter. And if you happen to like the stock, maybe for a trade or an investment, that's completely up to you. All right. Let's move on. Talk a little bit about what happened yesterday, Tuesday. First of all, it was the end of January. So one thing that means is that January's performance is now in the books. I didn't calculate it, but I believe the S&P 500 finished up close to 6%, right around there for the month of January. which will put it probably around 12th all time in terms of best January performances. That also places it in the top quadrant. I break down January performance since 1950 into 4 quadrants. And this one, January 2023, will go in the top quadrant. I can only tell you that in the top quadrant, there are 18 S&P 500 years, Januaries. And of those 18, the market went on to perform better than, it gained further ground from February 1st to December 31st in 16 of those 18 years. And I believe like 7 of those years, 6 or 7 of those years, the S&P tacked on at least another 20%. So we're talking about potentially some pretty good gains for the balance of the year based on simply the January barometer. Now you might say that it's hogwash and so forth. I actually think there's a lot to it. It's not only the top quadrant, but if you move the top quadrant, you average getting another 15% rest of the year, average, those 18 years from February to December. If you're in the second quadrant, which I think is like maybe from about 1.5% to about 4.25%, somewhere in that range for January performance. If you're in quadrant number 2, the S&P 500 average is going up 10% for the next 11 months. And if you're in quadrants 3 or 4, the average return for the balance of the year is only about 3%. So you go from 15% average in the top quadrant, 10% in the second quadrant, and then both the third and the fourth average right around 3%. Average. Anyhow, I find it very interesting. I find it useful. It was a perfect indicator in 2022. We had a horrible January and we had a bad year. We struggled the rest of the year. So we've gotten a good January in the books. We'll see what happens. So I got the Dow Jones Industrials yesterday up 369 points. S&P 500 was up 58. NASDAQ up 190. Mid caps 62, small caps 31. Across the board, look at the mid caps and the small caps breaking out again. NASDAQ not breaking out. Actually, the other 3 did not break out, but the NASDAQ did work its way back up close to breakout territory. Same goes with the S&P 500. Remember the number there, 4110. That's what I'm looking for, 4110. That's only 35 points away. That's less than 34 points away, but it's less than 1%. Could easily do it today. We'll see. The Dow Jones in a little bit of a symmetrical triangle, I've noticed here. Slightly lower highs coming down, and that comes off of an uptrend. Symmetrical triangle is a continuation pattern that normally resolves itself to the upside. That's why it's a bullish continuation pattern. But in order to have one that's really meaningful, you need a trend. You either need an uptrend, symmetrical triangle is bullish. If you have a downtrend and you have this, it would be bearish. Kind of like this is like a bull flag. And if it was coming down and it did this, this would be more of a bear flag. So we'll see what happens. But right now I'm seeing lower highs, higher lows, and we're squeezing right now in this triangle. So we could get a meaningful breakout again. Watch to the upside. They usually, not always, usually break to the upside. Looking at the sectors, we got discretionary up 2.29%, materials 2.2%, real estate 1.83%, industrials 1.7%, and technology just under 1.4%. So those were your leaders yesterday. All 11 sectors were up on the day. All right, 10-year treasury yield. So this morning we got the ADP employment report out. And let's get a quick update, see where we are right now. So we're sitting at 3.47, down about 6 basis points. The ADP employment report came out this morning. We were expecting 158,000 jobs. We only came in with 106,000 jobs. So definitely slowing a little bit here. The December report was revised higher from 235,000 to 253,000. Hold on one second. Okay, sorry about that. So right now we've got the 10-year treasury yield moving back down. The bond market normally is impacted quite heavily, as you might expect, on a Fed day, especially if there's any surprises. I don't know if there will be, but we'll see. Hopefully there will be a timetable where the Fed says they're done. They've been leaving it up in the air a little bit. Again, we are expecting to see a 25 basis point hike today. So we'll have to see what they say about after today and where we go over the balance of 2023. Do they acknowledge that inflation's slowing and that they're winning their fight? If they do, and they kind of put some sort of a timetable where they think their job is done, I don't think they're going there yet, by the way. But if they were to say something like that, obviously that would be very bullish for the market, both the bond market and the stock market. So I think you'd see buying in both. And buying in the bond market, of course, sends the yields lower. Anytime prices go up, yields go down. So watch 337 to the downside on the 10-year treasury yield. That was the low a couple of weeks ago. We had a 340 low beginning of December. And if we take that double bottom out, I've said before, I believe by the end of this year, we could be down to 2.5% on the 10-year treasury yield. I really think that it could be the case. So a breakdown, I think, would be a little bit of confirmation that this downtrend is continuing. You can see here at 255, that was the low at the beginning of August before we ended up turning up and going up one more time. So from a long-term perspective, short-term perspective, it's this double bottom support. Longer term, you had to move up. This is a significant pullback. You had to move up. So we're still in this higher high, higher low scenario until we take out 255 or so. But you can't get down there until you got to break below 337 first. So this is the level I'll be watching. S&P 500. So let me annotate, because for me, this one's really easy. We have broken the downtrend line connecting the highs last year. And so for me, it's all about, do we get through this level right here? And then, of course, you got a couple of candles right here, candle bodies that struggled to get through 4,100. That one's 4,110. I mean, when you take out a triple top in addition to the downtrend line, that really starts to paint a much more bullish picture technically. Also, if we get out of here and look at it from a weekly basis, I mean, we're now back up above the 50-week moving average, which we couldn't do on the last two moves. So now if you take out this little area right here and get above that 4,110 level, it really starts to look bullish on a number of different fronts. I mean, this little uptrend right here off the October low, I mean, I see a move up and I see a cup. So a breakout there, that measurement, top of the cup to the bottom of the cup, would be roughly 300 points, a little more than that. So that measurement on that cup and handle breakout would be roughly 4,400, maybe a little bit higher. And that would easily clear the August high. So I see a lot of bullishness emerging, but I do think the first step is to take out a key price resistance level. And that comes at 4,110, as I showed you on the daily chart. NASDAQ 100. I follow this very closely because I trade the QQQ a lot. And I simply own it in my retirement. Personally, that's rather than trying to pick individual stocks right now, because I think in a bottoming process like we've been in, we've seen a lot of whipsaw, and whipsaw occurs across everything, ETFs included, but it's not as bad in an ETF. And so that's why I personally have just stayed a little bit more invested in that area, and I've stayed away more from individual stocks. So the number here, if we, I think it is 12. Well, I'll tell you what it is rather than guess. I look at these numbers so much. So the high candle body over on December 13th was 12,141. And I think this is 12,166. Yep, 12,166.60 was the closing high on Friday. We got as high as 12,248. So that intraday, we clearly went above, but we lost right at the end of the day. We came back down and closed just barely above, not exactly a huge breakout. We pulled back on Monday. And then yesterday, if we look at the shortened 10-minute 5-day chart, you can see we had basically we were right around flat at the open. And then and we saw a little bit of weakness there in the first 30 minutes. But after that, you can see it was a pretty steady day of buying. And we ended up breaking out above the highs that we had from Monday, just in the last few minutes of the day yesterday. So nice little rally into the close. And I think that bodes well. We'll see. So anytime we're getting ready to have a Fed announcement, for some reason, it just seems to me like we gravitate towards some key levels. If you go to an hourly chart, not really seeing anything here, maybe, right about where we finished on Friday, that would be close to the breakout level. So if we were to tack on the NASDAQ 100, maybe another 60 points or so, 65 points heading into, the Fed announcement at 2:00, I would not be shocked. That seems to be the closest level to us that would be a meaningful level. I mean, if we go to a daily chart, I thought after Monday, maybe we were going to work our way down and have a big test of the 20-day moving average. But instead, market came right back yesterday, which was good. We are in a bullish period of the year, by the way, January 26th to February 3rd. This is one of the more bullish periods of the year. And we typically are bullish right around the beginning of the month, end of the month into the beginning of the month, because of money flows. A lot of money flows come in from pensions and 401ks and so forth right around the beginning of the month. And you get a lot of front running, a lot of traders, market makers, portfolio managers who understand that money comes in at the beginning of the month, which isn't a real difficult concept. I think that's what triggers a lot of buying at the end of the month. Anyhow, we are sitting here now, February 1st, waiting to try and get through this level on basically a triple top there on the NASDAQ. The reaction high from September, you can see we got much further to go than we do on the S&P, because the S&P was so much stronger in the fourth quarter than the NASDAQ. But that level, if you're interested right here, is 12,739. So we still got another 500 points, actually 600 points to get up to that level. All right. So let's take a look. Yesterday, we had a really good day in the home building area, home construction, another big hollow candle breaking out again. If you take a look at a weekly chart here, it's been an amazing run. It's been crazy for this space. Got crushed with the pandemic, had a huge rally in during the balance of 2020 into 2021. Of course, rates right here, rates were tumbling. So we saw, home construction go from maybe 425 up to 1,300, almost a triple in about 7 months. Then we settled down. We did make some new highs. 2022 hit though, and rates started going up. The market began anticipating. Remember, the big rate hikes didn't start until May. I think it was the May meeting where we went up, or maybe it was June. We went up 75 basis points, first one. If you notice, that's when home construction bottomed. Common sense would tell you when rates start going up like that, housing should start going down, right? Market doesn't work that way. So instead, we actually got the market, we got home construction stocks going up while all the rate hikes were taking place. A clue that rates are not going to stay up. We've been seeing it. I showed you in the 10-year treasury yield. The long end is already expecting the rates to come back down. Long-term investors in bonds are not requiring higher rates. I mean, I don't know how else to say it, but if you really thought inflation was going to be stronger down the road, you would require more of a return. You wouldn't buy a 10-year treasury yield and keep buying 10-year treasury yields, treasuries, sending the yields lower. If you thought inflation was going to keep going up, it would make no sense. So I look for the news in the charts. I don't pay any attention to the media. It's just a waste of time and it's a stressor. Just focus on the charts. The charts tell you everything you need to know. Remember, the stock market looks ahead. The media looks behind. Big difference. Stock market looks ahead. Media looks behind, always talking about what just happened. And then they try to use that to project what's going to happen. And they're so far behind, it's not even funny. Nobody will be talking about higher rates later this year. That is my belief based on what the charts are telling me. All right. I wanted to go over, I don't know if you all are aware of it. Our members are probably EBD subscribers, the EB Digest subscribers should be aware of it as well. But we provide chart lists for upcoming earnings. And it's really useful just to go back and see how everything performed. I'm going to go through these charts from yesterday. These are all the companies that reported either Monday after the close or Tuesday before the market opened. So we had a chart list of all those companies. And I'm just going to go through each one of them with you. So let's start off with, and I'm going to go from worst performance. I want you to look at the charts. And we're going to go from worst performance to best performance. So this is the worst performer yesterday. This is Harmonic. And what I like to do is just kind of flip through and get a sense of, is a stock hitting a key support level? Is a stock breaking out from a range? I really love the big hollow candles with heavy volume that kind of show a character change on the chart. And I'll show you some of those in a bit. But Harmonic, I mean, it went down a gap down. I can't tell if it gapped down below support. Let's see, the close 1306. The low close was 1295 and we opened at 1295. I always say a penny makes a difference in the open. If we had opened at 1294, 1 penny lower below that prior low, I would not even consider the stock. But because it opened at 1295, I think this level could hold. And if it doesn't, you can get out pretty quickly. But I'd be looking for 1295 on a closing basis to hold. Let's see, WWD. And again, these are in order of worst to best. So another stock here down 6%, 6.5%. Long tail though. See this AD line, which has been so strong? Notice the AD line ticked up yesterday, even though we were down $7. Why is that? Well, it ticked up because we finished yesterday slightly above the midpoint of that candlestick. So the move down here, that low, the AD line is based on where you finish relative to your high and low that day. If you're right squarely in the middle, there'll be no change on your AD line. But as you start moving higher and higher, you'll take a percentage times your volume. So if you finish all the way back on the high, even if you finish down for the day, if you finish on the high of the day, all of the volume gets added. And if it's a big volume day after earnings, that can be a big boost to your AD line. All right, next PSX. I'll go through these a little quicker. I'm really looking for certain candles. That one now doesn't really look very good to me. And remember, this was the day when we had those really funky beginning of day price action. PSX, I'm pretty sure did not trade anywhere. Look, I mean, we didn't even have it was an average volume day. There's no way that would have been an average volume day if we had gapped down below price support and then rallied like that. Would have been very unusual to have average volume. Anyway, this chart not looking great to me. It's just, again, in a range. GLW breaking down a little bit below these lows, but looks like it's right about the breakout point. I would watch the 50-day and also this gap support level. I think $33.50 to $34 is where GLW needs to hold. J&J Snack Foods, that's JJSF. Doesn't really trade much, so I don't really pay much attention to these stocks if they don't have a lot of volume. Caterpillar went back, held its 20-day moving average. Looked like it was a little worse. And this is another one where that AD line ticks higher. Got a nice AD line. We were down a lot intraday, but then we rallied back. And that's the history. That's why this AD line keeps going higher. This stock has a propensity to trade in the upper half of its range during the day. So this is a good stock to look at potentially in the morning, because most of the time when we're seeing morning weakness, we see it followed up by some afternoon strength. All right, hold on one second. All right, next, McDonald's. McDonald's gap down, but another nice finish. So here, all of this volume basically gets added. See that big move up in the AD line? It's because we finished almost right on the high of the day. Very close. So literally almost all that volume gets added. PFG. Long tail holds both moving averages and comes back up. Big volume AD line shoots higher. This is actually a pretty nice looking chart. I like this move up. Nice little cup forming. 95, we get a breakout above 95. I think that will be a big breakout for the stock. SYY, this is Cisco, the food company. Another one went down. This will be an interesting one to see whether or not it opened at or below. So there's the low close, 75.50. Yesterday opens 75.50. And it went down intraday, came roaring back. I'm telling you, sometimes literally right to the penny, it matters. You get the breakdown. I don't trust a stock if it opens 1 penny below support. May not seem like much. You're talking about a $75 stock, 1 penny. What's a big deal? Technically, I don't know if it's a signal. I don't know what it is, but I would be careful if you close below the prior support area, or if you open below the prior support area. All right, let's see what else we got. I'm going to skip some of these because I want to get to some of them that we're doing well. But Hubble, HUBB. Another one went below support intraday, comes back up above and holds. Helmerich and Payne, HP. Excuse me. Just sideways consolidating. This one really did almost nothing. Besides maybe rally a little bit from earlier lows. CFLT, this is Confluent. Another one, intraday back down below the moving averages, finishes above. This is a very interesting AD line, considering this stock might be on the verge of getting ready to break out. I think this is one I would definitely keep on my radar. Looks like the volume trends are getting better, even though price action overall is going down. And that AD line taking off. Breakout, this is one that could really get running. Manpower, kind of like this chart as well. I see an uptrend, maybe a little cup, extended handle, false breakdown yesterday. We rally, AD line looks good. This is another one. Watch for a breakout above 90. Manpower, I think, looks good. Let's keep going down. Let's look at MDC. I'm going to keep going until I see one of the charts that I like, because we're running out of time here. So I'm just going to go down toward the best performers. I like this. Love this sideways. Look at all these tops coming in here right at about 520, 525. Yesterday, we get the breakout. AD line looks strong. I would be looking for follow through here on MSCI. I like this stock. Dover, another one. Really nice breakout. Got this move up, nice little cup, a little bit of a handle, maybe a little deeper handle than I like to see. It shouldn't go down more than half the cup. So that maybe nullifies it, but you still got a breakout no matter what you call it. That's a really important level. You can see 145 held right there on the way down. That was support. We gapped at 145. Another time that level was big. And then look at these three failures right up near 145, 145 over here. Yesterday, big volume breakout. That's good. Dover looks good to me, technically. LII, Lennox, need to break out above 271 or so. PII, Polaris, pretty nice move. I'll tell you, when you get these big volume hollow candles, what I look for, we're actually creating a chart list for our members right now. We're going to have them annotated. But what you want to see is this key support level. We're going to be annotating all these charts. So stock like this would have a annotation coming in right here at the open. That to me is going to be big support on the way down. A lot of traders will wait for the bottom of gap support. I don't think you're going to see it on many stocks that have heavy volume and a gap up. I think you'll see the top of the gap fill, not the bottom. So, but be looking out. I think by this weekend, we should have this chart list up and running for our members. Let's see, Pulte. Just a couple more and we'll be done. Nice gap up, market just opened. So we're seeing a little bit further strength there. SANM, not really there. IP, I think that was a good candle. Yeah, I like that candle right there. Again, big volume. There's your gap. You work your way back down toward the top of gap. That's usually a pretty good thing. ALGM, nice volume, nice breakout there. Spotify, this was one that had a big day yesterday. Continuing the recent uptrend. Look at the AD line. This is in the internet space. Internets have been on fire in January. AOS was your second best performer yesterday. Beautiful candle taking out these recent highs. Love that candle. Biggest volume of the year. So yesterday's open at about 64, whatever it is. That's going to be big support going forward. Last one, biggest gainer yesterday, SYM, Symbotic. It was up 15.67%. Got up almost that 16 level. You can see right now we're struggling with that. A breakout there would be bullish. All right, let's take a look, see what the market's doing, and then we'll wrap up today. Slightly lower. Down 200 though, down about 2/3%. S&P down 11, NASDAQ down 12. You know, it's hard to say what we're going to do pre-Fed, but my guess is I think the market is going just to continue slightly moving higher. That would be my guess, and get close to resistance around the time that the 2 o'clock announcement comes out. We'll see. Anyhow, everybody have a great day. I'll be back tomorrow over at Stock Charts on Stock Charts TV starting at 9 a.m. So go over there and click on Stock Charts TV just about this time tomorrow, maybe a half hour sooner. And that'll be your next episode of Trading Places Live. Have a great day, everybody. Happy trading.